Hi, my name's Kiran Morzaria. I'm the CEO of Cadence Minerals, an AIM-listed company and an AIM-listed investment company. What I want today to do was to effectively go through a very short, succinct presentation in relation to who we are, our investments, and the plans for the future in terms of the next year. This next slide is disclaimer. Please read it at your leisure, but nonetheless read it. The next slide really is showing who we are. What is our strategy? As I said, Cadence is an AIM-listed company, and its strategy is to invest in early in the resource cycle, mineral resource sector, and that means pre-revenue. We invest typically in two types of assets. The first are private held assets, and the second are publicly held assets. And what we call them direct project investments and publicly listed investments. As you can see there, the direct project investments, we typically take larger stakes, we take up to 49%. And we therefore also take, because they're illiquid, we take a far greater active role in management, and we incentivize management and the company to perform well via staged investments on achieving what we all call value targets, or value targets in terms of operational performance. And we are really part of the management team there. In the public listed investments, because you are simply a shareholder and you have the same rights as the other shareholder, we typically try to get a non-executive seat at the board, but we don't take an active role there, and therefore to mitigate our risk, we look to invest in assets that we can sell, and then obviously a public listed asset, if required, we can sell and buy in that asset fairly easily. I think it's important to understand what we look for are undervalued assets with irreplaceable strategies. What we mean by irreplaceable strategies are irreplaceable strategic advantages. What we mean by that are assets that have a resource that is unique to them, like they've got it, or they have technologies, or for example, it is in a structure, for example, Amapa, where it was in a JRP, and a lot of the balance sheet is written off and there's not much capital to invest to get it to production. So that's what we've been looking through, and our investments to date, in terms of ones that we hold at the moment, have been technically successful, and we certainly hope that that technical success will deliver shareholder value to Cadence going forward. So here's the executive summary of Cadence's overall assets, and as you can see, those that are highlighted in red are the publicly listed assets, and those in dark grey are our direct project investments. In terms of commodities, we are commodities agnostic, but we've looked at thematics and looked at what we're looked at where we see the commodity cycle going. Now, we've been long believers in lithium and rare earths because of the electric revolution that we're going to see in the transport sector. And we have two amazing assets, European Metals Holdings and our Mexlit JV with Bacanora. These are two of the largest non-clay assets in the world, with lower cost quartile production numbers, producing the final product, importantly, not producing a spodumene concentrate, which, if we invested in that in somewhere like Australia, of late, lots of those have had to curtail production because of the pricing of lithium carbonate. And it's, between those two, they got an NPV of 2.25 billion, US dollars. Now, admittedly, in Mexlit, that mining area, we'll get mined in year 7, but nonetheless, it shows that these assets are technically viable, got good economics, and really they're in the stages of either embarking the bankable feasibility fully funded by SES, or they're in the process of financing and starting construction in the case of Bacanora. Our other asset is a Yangamana JV, or the two assets, Yangamana JV, which is a neodymium asset used in permanent magnets for electric motors. And that is going through construction commissioning, an excellent off-taker involved there as well. MacArthur Minerals, bankable feasibility study on an iron ore deposit, also partly funded, bankable feasibility has been funded by Glencore through a loan note, and they've got a life of mine off-take. So these are assets that are well advanced. Haven't got the risk with exploration, resource definition, which typically we would have historically invested in, but haven't recently, and disposed of those assets there because of the dearth of capital or not invested capital there. And we've really focused on these assets that are bankable feasibility study, coming up to construction commissioning, and therefore closer to production. And in the case of Amapa, is pre-feasibility sort of resource definition. We need to redefine that resource. However, as we go through, you'll see that I believe that there's a sort of a lower risk associated with Amapa overall. So what is AMAPÁ? AMAPÁ is an iron ore deposit in the northeast state of Brazil. It was first discovered in the 1990s, developed, and was producing about 700,000 tons. Anglo took it over, ramped it up to 6.5 or 6 million tons per annum, and then was deemed it non-core of their assets. It wasn't large enough, funnily enough, and they then disposed of it to Zamin. In that process of disposal, a port collapse occurred, and that's where the opportunity lies, oddly, because that, along with some much lower iron ore prices, basically means that they couldn't generate enough revenue to survive. So they went into judicial administration with, albeit a port collapse, but integrated railway, port and mine, a substantial resource lasting for another 14 years, stockpile within there of about 30 to 40 million in terms of, equity in the asset, and, producing a product that's of high quality of 65%, which is in demand. So, we believe that this asset can be brought to production swiftly. It has mitigated the risk in terms of resources and technical risk. It's also got a mitigated risk in terms of the capital, partly mitigated, because these assets take 600 million, and as you'll see later on, it's not that sort of level of capital investment we need. And also there's an embedded $30 to $40 million worth of equity, which could be, in terms of the asset, the stockpile, which could be utilised to invest in the company, in the asset, and also deal with secured creditors if need be. So, and we've also mitigated our risk in terms of our investment strategy. So we've got, 2 stages of investment and possibly a third. We can go up to 27% for $6 million, but these are based on 2.5 million certain key preconditions being met. The first being the railway being reinstated December last year. Now it is the settlement with the bank creditors, and there's obviously that's still outstanding. And then we've got the 3.5 million that we've put in. And I would, that is on the basis of every single mineral, all the mining licenses and operating licenses being granted. We think it's worth to have a first right of refusal to go to 49%. Here's a bit of a summary of the asset and where it is. As I said, northeast of AMAPÁ, northeast of Brazil, in AMAPÁ state. It's based in a place called Pedra Branca do Amapari. And that's the mindset. There's 180 kilometers of railway, and that then is delivered to the port once fully operating. So it's a fully integrated process, and it's important because you don't get gouged by railway providers or port providers. You've got it, you can keep the cost, and substantial capital has been already invested, so the depreciating amount is very little. So the overall cost of running this is relatively low, even including depreciation. Here is a sort of a very brief overview of the Amapa iron ore asset and the vendor estimates. As I said, simple open pit and processing. It goes into producing a very high quality material, pellet feed of 65%, which is important for the market because that pellet feed, it has a much lower carbon footprint and emission. That's going to become increasingly important in the production of steel. It's got, as I said, an established infrastructure in terms of mine processing infrastructure. We talked about capital expenditure previously being, $400, $500 million to sort of put this infrastructure in place in the first place. However, now, we're talking about that. We're talking the vendor estimate of $168 million to bring it up into production. The majority of that is in the port, where we can see that that's in the order of $70 million. Now, these figures will be revised as a scoping study. We'll see where they end up at. In terms of OPEX, we're at $21 per ton to deliver that to the port in AMAPÁ, and then there'll be shipping costs on top of that. So this is a low cost and high quality product that we'll be looking to deliver here. Here's a quick outline of you can see here, the mine plan. Now, this is the mine plan as it was at the end of 2015, so nothing has been mined since then. And you can see what they started to mine. In this area here, which is to the left of the picture and basically to the south, you can see the mining area, the plant and some of the tailings dams. And this area here is all the mine area. And as we go to the end of the mine life, you see that we've mined, you would have planned to mine all the way along this limb of this mineral resources, all the way coming to the north. In fact, it goes round this side as well, the mineral resource, for potential expansion. But I think 14 years for now is substantial resource enough. So, I think, it's important to highlight what our plan is over the next, even short term of the next year, and also, when we're going to get to production. So when we look at this, you remember we had to go through a JR approval. That's all done. We raised our capital to put our 2.5 million. First, the preconditions in terms of the railway preconditions has been met. Now we need to get the banks to come to a settlement, and then we get our 20%. It's important to note that once we get that 20%, we will probably be shipping. One or the other's going to come first, shipping or the bank settlement. But, we'll be shipping and moving material and technically be profitable, although the asset will be profitable, although, the money will be going back into the asset in terms of capital. And then by the time the end of the year, our next tranche will go in, and we'll have, that will be only on the basis of the mineral resource license, all the mineral resources licenses being granted, the DPM, the AMPM license being granted, the operating licenses being granted, etc., etc. And that's really important to note. That's completely de-risked the regulatory side. So in essence, what we have is we'll have a producing asset, technically profitable, and we would be putting in $6 million. We'd have put in $6 million with an asset that's producing, an asset that has all its operating licenses, and has cleared up its capital structure, substantially mitigating its risk. And I think that's an important value driver, given that it was previously valued at 600 million and a depreciated on an impaired value by Anglo American. We're talking about getting 27% for 6 million. The next one is a bit more of a longer lead time, showing where we anticipate to be in production, which is basically tail end of 22, and if it slips, early 23. But you can see the process of getting to production, embarking on commissioning studies later this year, continuing the iron ore shipment, middle of next year looking to get project equity into the asset, and debt financing to begin commissioning middle of next year, with production tail end of 22. Which is what is currently planned. So I think that being that, I think we're going to move on to the Q&A sessions.
Thank you for the presentation, Kiran. So it seems more than fitting to start with the company's most significant investment, which is clearly the Amapa project. So perhaps you can touch on what is the latest with the settlement regarding the creditors for the project.
Yeah, so I think it's important to note that there are effectively several sets of creditors. There are 4 types of creditors. The first 3 were already settled in August last year. Well, they were agreed to a settlement, and 99% in value voted in favour of it. The outstanding is the secured bank creditors, which once we have an agreement or that is settled, we will get our 20%. Now, as announced, the court was due to make a decision by the end of June. They haven't as yet. And I think the court is allowing some leeway in terms of commercial discussions between the parties to reach a settlement.
And when exactly do you think Cadence will start generating revenue from the project?
So technically, as I've just said beforehand, the actual project will generate revenue as soon as it starts shipping, which is scheduled for July. And really, it will be post, once we've done that capital investment, post the commencement of production, which Cadence would start to see revenue from dividends from the JV structure. So, in post 2022.
And in terms of the next stages for the project, is there any next bit of big news that you're expecting from Amapa?
I think I just highlighted a bit earlier on in the presentation, in essence, whichever comes first. I think there will be an outcome, settlement or otherwise, with the banks and or the shipment of the iron ore. One hopes that one of those will come first, not sure which at this point in time. Then we'll look to go to the scoping study, and that will be the next thing to be released. After the scoping study, we'll be looking to get all the licenses completed so that we can put in our next tranche to go to 27%, all of which we hope certainly that we're targeting to get by the end of this year.
And I assume you're pretty confident on the whole that Amapa will become a fully operating iron ore mine?
Yeah, otherwise we wouldn't be making these levels of investment. I suppose, what we do have is have that right to not to invest if certain things don't occur. So that's why we structured it that way. Obviously, the vagaries of the iron ore market, although we believe it's very strong now and will be strong for the future, who knows? But look, At these prices, we can see this asset being highly profitable and moving forward to production.
Mm. Now, it feels right to touch on COVID-19. How exactly is this affecting Cadence current operations in Amapa? And if so, to what extent here?
So to date, we really haven't seen any material variances as a result of COVID. We've seen some small effects where minor things such as contracts being delayed to sign in terms of engagement of people historically because of illnesses in the family. But at the moment, nothing. But, our timeline is contingent on COVID. Changes may be implemented in the Amapa state that would change that. So at the moment, no. But we keep a watching eye and we'll keep people informed if that should change.
Great. And just to touch on European Metal Holdings, what's the next milestone and where is this currently at?
So the next milestone is, is basically going through the bankable feasibility. And so once they start that bankable feasibility study, they'll announce it and move forward. Considering Ches has now invested its money of 29 million to start that, there's an imperative to get it started as soon as possible.
Great. Now, I've noticed beforehand that you've said Cadence's focus on iron ore opportunities appears particularly timely. So I just wondered what the current state of this market is and where demand is coming from exactly. Yes,
so iron ore has fared very well, or reasonably well, during this whole COVID issue. During the tail end of last year, you had the middle of last year, you had Bernardino disaster, which took a lot of iron ore from Brazil and the high quality iron ore from Brazil off the market. COVID has meant that in Brazil, some production has been restricted. One of the mines, one of the major mines closing down. But nonetheless, iron ore has stayed stable in terms of pricing and more recently has improved. And that's fundamentally due to stimulus packages. Stimulus packages in China, where they want to stimulate that economy. They're going to invest trillions of renminbis into infrastructure, of which a proportion will go into housing, improvement of railway infrastructure, etc. And we're also seeing that in the United Kingdom, where we're having a levelling up and infrastructure being built here. So I can see overall a strong demand for steel and hence iron ore, and basically the majority of the production of iron ore and steel is in the Far East, in Korea, China, and Japan, and so that's where our product will go, and I think that will go from strength to strength.
That's great. Now, you've previously said that you're seeking to retain investments which have the highest profitability of attracting capital, entering production, whilst disposing of those that don't. So how exactly have you implemented this strategy, and what are your most valuable assets as it stands?
So I think as we announced in our annual report, we had either ceased investment or didn't want to apportion any more capital to two of our assets at this point in time, which is our Greenland. Effectively, we let that license lapse because it was an exploration asset in Greenland. Quite expensive to invest with a very high risk associated with that. In addition, at the moment we've halted investment into our Australian lithium assets, mainly because of the slowdown in the spodumene concentrate market, and again we could rather put that money into Amapa and have a far less de-risked project and get substantially better returns, we believe. So we've done that, and then our smaller equity investments, early exploration, there really wasn't capital in the market for those things, so we exited out of those, and that money was utilised both to pay down our loan and also to fund Amapa.
Now, looking ahead, what kind of milestones does Cadence hope to achieve over the next year specifically?
Yeah, so Cadence, there are the Amapa milestones which we've highlighted, which is either bank settlement and shipping of iron ore. Which one comes first? Let's see. Get the scoping study published so that shareholders can understand the value in Amapa. The next one will be the licenses and operational licenses and getting our 27% investment. So by the end of the year, that's where we hope to be. The other assets will be basically proceeding down, commissioning studies and construction. Basically, that is the JV at Bacanora asset and Hastings Yangibana, and the other two assets embarking on a bankable feasibility. So the targets that we control are very much AMAPA, and we'll drive those as we've just highlighted earlier on.
That's great. And I know you've touched on this in the presentation, but maybe just to round off, could you explain why the Amapa Iron Ore Project is such a potentially transformative asset?
Yeah, absolutely. So we have to look at Amapa as, firstly, let's look at what it was previously valued at. Impaired value was worth 600 million. We're talking about getting in for 27% for 6 million. There's a potential upside if it gets revalued to that sort of level in the market. Also, it has that high return, but it doesn't have the, we don't believe it has the same level of risk associated with often these sort of high returns, because technically, as I've shown beforehand, it has a resource, it has the infrastructure, albeit it has to be rehabilitated. So that technical risk, and it has a market that people know about, and it's been sold previously, that technical processing risk is substantially mitigated. The way that we invest in terms of, we only put our money in after milestones. So, to have a milestone where we have every single permit granted, which is a substantial risk previously, or could be a substantial risk, every permit grant before we put our next tranche in, mitigates that regulatory risk. And lastly, the capital risk. Again, because it's had already that capital invested, that risk is relatively low. We don't have to raise 400 million to put it into production. We're talking in the order of 168 million. And it has equity in the project itself. It has a stockpile worth between 30 to 40 million net, which could be utilized in terms of reinvesting the project, dealing with the secured creditors, or anywhere between. So it's a relatively low risk investment proposition with a relatively high risk return. So that's what, with a relative high return, that's why it's a potentially transformative asset for Cadence.
That's great. I think that paints a great picture of the project. Well, thank you so much, Kiran.
Thank you for your time.